All right, thank you guys for joining to this section. All right, this is basically day 5 of the EMFOREX beginner to pro free class. Okay, and we still have about 6 days left. Okay, so far it has actually been a journey. Okay, it has been a successful journey, and I've been getting very insane amount of feedback from those that actually attended the class. All right, so for those that missed the class, um, that particular section you've missed has actually gone. So there's still opportunity to join in. Okay, there's still opportunity to join in and enjoy the other half of the section. Okay, so like I said yesterday, I thought about demand and supply trading. Okay, and I spoke about the other block. Okay, and also inside bar demand and supply. This candle here is an inside bar candle. Okay, so that's what is making this price react here. So price came here and is reacting off this level. All right, so so let's kick on. Let's kick in. So we have basically, mm, to me, yeah, we have basically three. Okay, we have trend line break. Okay, we have trend line bounce, and we have trend line retest. Okay, so trend line retest is basically when the trend line has been broken, then it comes back to the trend line and pushes off that trend line. So now trend line on its own can be viewed as a strategy of its own. Okay, there are some people that trade just trend line alone, okay, and they make reasonable amount of profits. All right, but the best, okay, is when you use it as a confluence. Now I've been speaking of confluence. Now basically confluence is anything, okay, any strategy or any single thing that supports your decision, either buying decision or selling decision. Okay, let's check the definition, the dictionary definition of confluence. Okay, all right, let's get the dictionary definition of confluence. All right, the joining of two rivers, especially rivers of approximately equal width. Okay, an act or process of merging. All right, let's see confluence in trading. Okay, because we are trading, so yeah, basically just like joining. Okay, it's just like a point where two or more things meet together. Okay, confluence meaning forex. I think this will actually give more light to it. Okay, let's see. Okay, confluence trading is when you combine more than one trading technique or analysis to increase your odds of winning trade. Okay, of a winning trade. Okay, you use multiple trading indicators that all give you the same reading as the way to confirm the validity of a potential buy or sell signal. All right, so basically you using a trend line, it could be a strategy of its own, yeah, but most people use trend line as a confirmation to maybe demand and supply trading, maybe indicator trading, or whatever strategy or pattern they make use of. All right, trend line also serve as what, um a confluence. Okay, and most people use the trend line to measure the health of a trend. Right, so If your trend line is slopey, all right, something like this, let me get a fresh chart. Let me not use this. Let me get a fresh chart that I can actually clear every single thing here. Let me see, is AUDNZE. Have I done anything on this? Okay, I've done something. Let me see. Let me see USD card. I've done something here also. Let's see. I just need a fresh chart I can actually. Okay, 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 okay. Yeah, I've done something here, but I can let go of it. Now this is actually a trend line that I drew previously. Okay, let me see the connection. Let me see the connection of this trend line. Okay, this could also serve as what a trend line retest. Okay, it may react to this level and push to the downside. All right, but let's see how the market plays out. Okay, so basically trend line is a confluence. You see this trade I took on GBP a very long time ago. Okay, it's played out. You see the way I identify this level of supply and demand. Okay, and then I took the trade, okay, for a short. All right, I took the trade for a short with very little or no drawdown. Okay, these are the ways you get high probability setup when you trade good levels. Okay, when you trade good areas, you get high probability setup. Okay, so now forging on. Yeah, let me clear this chart so that we can have a fresh chart to work on. Now basically trend line actually shows the strength of a trend. Okay, now let me there's a line I'm actually looking for. Okay, line info line. Okay, so now let's see the degree to the to which this trend line is actually forming. Okay, you can know the strength of the trend, okay, from the way the trend line is actually slanted or whatsoever. All right, so this trend now is a healthy trend. Okay, you can see higher highs, higher lows. Okay, in most cases the lows don't even come back to the previous high liquidity. Okay, just rallies up this way. Okay, so this shows a what, a very healthy trend. Right, it shows a very healthy trend. Okay, let's see another example. Okay, let's see another example here, and then I'll show you how to draw the trend line. Okay, what you should be doing and what you should not be doing when drawing a trend line. Okay, so this is what we have here. Okay, this trend cannot be compared to this trend. Okay, you can't compare this trend line to this trend line. Okay, it took a longer period for the market to run through this. Okay, and it took a shorter period for the market to achieve this. All right, so let's see how many days did it take. It took about 276 days to achieve this 692 pips. Let me see. Okay, to achieve 1534 pips. It took 192. Okay, this is the daily time frame. Okay, it took 192 days to achieve, no, more than, all right, more than, because I was meant to extend it to this point here. Let me redo it from this point here, okay, to this point where the trend line was broken. Okay, it took about 253 days, close to a year, to achieve this move here. Okay, 253 days for how many pips? 1555 pips. Okay, let's say 1550 pips. It took 253 days to achieve it. Then for this one here, it took about, let me use this, it took about 69 days to achieve 1651 pips. Okay, so this trend is more healthier than this trend here. I don't know if you understand me. This trend is more healthier than this trend. Why I actually know is because it took a shorter period to achieve this 1651 pips, and here it took a longer period of time to achieve 1555 pips. Okay, so before you can get 1555 pips, you have to wait for about 250 something days here on this weak trend. Okay, and then you can see that if your stop loss was below here, you get taken out here. If your stop loss was below here, you get taken out here. If your stop loss was below here, you get taken out here. So this trend was not healthy. But if you place your stop loss below this low, 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 you could ride this trend to the upside. Alright, that is just what it simply means. Okay, it shows the strength of the trend using the trend line. Alright, so the more this is horizontal here, the more horizontal the trend, the stronger it is. Okay, so you see here now, you can see about 58%. Okay, here you can see about 26%. Let me just say, for instance, let me use the percentage to explain it. Okay, this trend is actually 58% strong. Okay, so it's above average. Average is about 50%. Okay, this trend here is about 26% strong. Okay, so it's more like a weak trend. Here is a very strong trend compared to this. Okay, so let's see this trend line also. From this point cutting through, I could choose to do it like this, or I could choose to do it like this. All right, but let me do it like this so I can get multiple touches of my wick. Okay, so I can get multiple touches. So I could get multiple touches and a more flexible trend. Okay, this is not bad as a trend line. Okay, it's not bad a trend line. Okay, so now this trend is about 31% strong. Okay, sorry, 28%. This is 24%. All right, so you can see here the rejections were kind of much. You see, when the market created this very strong trend here, it was broken. Okay, and then the market reached it. So I could use the same expectation somewhere around here also. Okay, so I can use the same expectation here. The market breaks through this trend, I could be expecting the market to drop to either any of this level here, this level. Let me highlight it. Okay, I could expect the market to drop to this level or to this level here. Okay, uh because of the way the market is. Okay, I could actually still use my fib level to get a good zone where the market could drop into. Alright, so this zone here is a zone where I could be looking to close my trade. Okay, expect the market to just reach into this level. Okay, something like this. The market could do something like this, reach into this liquidity point here. Okay, and then rally up. Alright, then here will be my second touch. Okay, if this trend line could be this way, here will be my second touch, and then I'll be expecting this market to play out. Okay, I'll just leave this analysis like this, okay, till when anytime it plays out. Okay, let me see what's up. It's actually going to give me strength and um more understanding of the market. Okay, so now basically I want to show you how to draw a trend line. Okay, you don't just cut across bodies when drawing a trend line. You can actually do it on certain occasions whereby we have a deep in, deep out. Okay, where the market entered into a zone and left the zone aggressively. Okay, immediately enter the market, left the market, immediately enter. Okay, something like this. Okay, immediately the market entered, it pushed down. Okay, immediately the market entered this level, it pushed down. So here we can easily cut across the bodies because here could likely be a week, okay, on a higher time frame. Right, if we're actually getting a trend line from a higher time frame. Okay, so now let's see how to draw a trend line. Let me get the first chart. I just want to save this chart for some reasons. Okay, I don't want to tamper with it. I just want to save it for some reasons, and then maybe once the market plays out, I will um to just strengthen my view on of the market. Okay, so you can see here how I made use of my trend line. Alright, so whenever you are actually trading your trend line, you should be careful of certain things. Okay, you can see here also when the trend line was broken, it was retested, right? Market retested this trend line and did what? Push down. Okay, so whenever you are trading trend line, there are things you need to put into consideration. Now, whenever you see the market push out of a particular level and break structure, okay, and break structure, and you should be very careful because when next the market comes back to that zone, it could likely push out and break another structure. Now, let me show you something here on the charts. Okay, so the last bearish candle was the last bearish. Let me go to the 4-hour time frame so I could get it clearly because the actions are quite tricky on the daily time frame. Yeah, so all right, so this was the last bearish structure here. Okay, this was the last bearish structure. Let me use this. Okay, this was the last bearish structure here. Okay, the market broke through, then did a little retest and pushed up. Okay, when it pushed up, it got to this level and decided to reach down for liquidity. Okay, now reaching down, where did it get to? A demand level. Okay, it got to this demand level here. Okay, got to this demand level here and pushed up back. Okay, started buying. Right, so now what we're actually looking out for is one, we're actually looking out for the point, the beginning point of that and now what we're actually saying is where we make use of the trend line is when the market has, you make use of trend line on the third touch. Okay, once there's a third touch of the trend line, then is a confirmation to that this trend line is very, very effective. So now if we actually join an inside trend line here, we could draw something like this. Okay, first touch, second touch. Okay, then this could actually be the third touch. Then we'll be expecting what? A ride to the upside. Okay, so if you are using the trend line, you could actually get a ride move, a nice move at this point here. Okay, so and also if we were actually making use of the trend line, okay, first touch, second touch, third touch here, the market rallied up. Okay, and one thing we need to know is that structures violation. Okay, whenever the market is actually respecting the trend line, you should be seeing structure break. Okay, the first touch should actually break a structure, because if it doesn't break a structure, then possibly the market may likely break that trend line and do what, a retest, something like this. Okay, um now let me show you something. Okay, so first touch, second touch, third touch, the market rallied up. Okay, coming here for the fourth touch. Okay, but the market could not actually break. Okay, now giving us what, an inverse head and a head and shoulder, sorry, giving us a head and shoulder pattern and dropping from there. Okay, the market gave us a head and shoulder pattern, okay, due to the low liquidity level found at this trend line area, and also at the level of demand. Okay, the market reached this demand level. You see the way the market aggressively pushed. Okay, so the market reached this demand level. Okay, but they will lead to buying pressure at this level. Okay, so the market did what, just respected it and dipped in for about 61.8. Okay, which is discount. Okay, so let's see, the market reached in for 61.8 level, and also reaching into this supply zone here. All right, so if we're trading supply and demand, okay, uh with fib on this trade, we could actually get a nice setup here. Okay, and if we're actually also trading support and resistance, let's see if our support and resistance level could pick up this zone for a sell. So let's just mark out our support and resistance from what we've actually spoken about in our previous classes. Okay, so let's see, this is a level here. Okay, let me change this to red. This is another level. Okay, this is another level here. This is another level here. Okay, this is another level. There are several levels around here. Okay, there are several levels around this area, but what I'm looking for are multiple touches. There is another level somewhere around here. Okay, let's see, this market has so many levels. Okay, there's a level here also. Like I said, you can choose to trade in between levels, daily levels of support and resistance. Okay, you can choose as a day trader, you can choose to trade in between levels of support and resistance. Okay, or supportable resistance level. All right, let's see, we're actually going to have only one section today, please bear with me, because I'm highly stressed out. Okay, we have this level here. All right, let's see, is there another place, I'll call it a wrap. Okay, now let's go to the 4-hour time frame and mark out 4 hours support and resistance levels. Okay, let's mark out the 4 hours support and resistance. We have this level here. 4 hours is always blue. We have this level here, and let's see how well the market could likely respect this setup. Okay, let's see what else do we have. We have a good trade on this, a bad trade on this. We also have this level, which is a confirmation here, 1 2 1 2 3. Yeah, market could likely reach in with a week, I don't know, but let's see. All right, this should be the last, and then we forge ahead because there are no much time here. Okay, we don't have time in our favor. Okay, so let's see weak rejections. Don't forget, on the 1 hour, what we're actually interested in are rejections. Okay, here also is also a rejection. Let's see this guy here. Let me connect it with this because I need multiple touches. Okay, I need multiple touches. I'll make it black for some, so because this is black week. Okay, let's see this week also. You can see how neatly the market reacted here. Okay, you can see how neatly the market reacted here. Okay, so let's still see if you have anything at all. Let's see this level here. This level. I'm interested in multiple weak rejections. Okay, so let's just call it a wrap. Okay, now let's go back to our daily time frame. What time frame do we even see that stuff? Let's see what time frame do we see. Let's see that stuff. Okay, that was the head and shoulder, right? We're talking about the head and shoulder we got on the daily time frame. Okay, talking about the head and shoulder pattern we got on the daily time frame. So now you see here also the market came into this level here. Okay, this level of supply. All right, the market came into this level of supply, now reached into this level. So if you had your stop loss at this level here, you could have been in this trade still. Okay, if you had your stop loss just slightly above this level here, you could have been in this trade still. Okay, so this demand and supply, or this support and resistance level I showed you guys how to draw, is very efficient. Trust me, it's very efficient if you know how to make use of it. Okay, I learned this from a trader, Q Banks. Okay, he was the one that showed me this style of drawing support and resistance levels. Okay, it's very powerful. Trust me. Yeah, it's a very powerful technique. Okay, so if you have areas where you want to place your stop loss, first thing first, what this thing does for you is that it gives you a strong level or a strong zone where you can place your stop loss. All right, if you have a good zone where you can place your stop loss, then and the market respects that area, you are still intact. Okay, this should be something you should know. Okay, if you have a good area of your stop loss, okay, an area where you can place your stop loss and the market will not come to that level, trust me, you are good to go. All right, so for instance, now let's say you have your stop loss just below this low here. The market mismatch it is quite understanding. Okay, it's quite understanding, and the market may likely dip into this level. Okay, but if you see that there are areas here that the market could likely reach into, and then you place your stop loss just at this daily zone here, you have chances of enjoying this ride. Okay, the odds are in your favor to enjoy this ride. All right, so that's just what it simply means here. Okay, first thing first is to protect your capital, as we all know. Okay, to protect your capital is basically the first thing on the market. So if you have a good stop loss that can help you protect your capital, then trust me, there are no much things you should be looking for on the market. All right, even if you were to enter the trade on the way, Okay, you have a good level where you can place your stop loss. Okay, even if I was to be in this trade, I was to jump onto this trade when it was actually still moving, I could start to place my stop loss below this low here or below any low here. Okay, depends on where the market is at that particular point in time. So I could actually place my stop loss even while I'm jumping into a trade. Here also, if I want to place my stop loss, I could place it above this level, above any level here. You can see the market did not come to those levels. Right, so we should actually understand the power of support and resistance and making use of it to our own advantage as traders. Okay, whereby we can actually um get levels where the market will not touch. Okay, if the market doesn't touch that level, you are still intact for a ride. Right, so if once your stop loss is not tampered with, then you are good to go. Okay, so now the way you draw your trend line is we connect through the wicks. Okay, we don't touch the body except on that case I actually showed you where the market dipped in and dipped out very fast. Okay, so now mm, this is a trend line, and this trend is more like a healthy trend in as much as we are seeing exhaustiveness and multiple weak rejections and the rest. Okay, but it's actually a healthy trend. Okay, so this is the first touch of this, second touch, the third touch. You could enjoy the ride to the downside. All right, so once the market broke it, you can see a retest. All right, so these are proven strategies. So whenever the market breaks a trend line, okay, we should, whenever the market is reacting to a trend line, we should be observing, or we should be very very observant of what structures. Okay, so once there's a break of structure, that point at which the market broke structure becomes your first touch. Now for instance, now the market broke structure at this point. Okay, now this the level or the demand level that actually did break that structure is your first point. So this is my first point, this will be my second point, and then maybe likely my third point may come in somewhere around here. Okay, the market could likely reach into this level. Yeah, I could decide to buy the market at this point here. Okay, let me go down to a lower time frame and get a good entry for a short. Okay, so I could decide to buy the market anywhere around here. Okay, I could decide to buy the market anywhere around this zone. Okay, going down to the 1 hour time frame, I'll still modify it because this is a supply a demand zone, because I saw price moving out of that zone aggressively. Okay, so this is a demand zone. I could wait for price to get to this level. Okay, let me see where the market could likely reach into. All right, so this is a good level. If the market choose to get to this level or somewhere around here. Okay, so what I should be anticipating on this trade could be something similar to this. Okay, my analysis or my anticipation on this trade could be something similar to this. Okay, so we could have something like this and then a ride. All right, do you understand me? Do you have any question? Just ask your question. All right, do you have your question? Just go ahead and ask your question. Then let me quickly attend to it. Then I will call it a day. We are not going to join back on the next section. Okay, we are not going to join back on the next section. We just have just this one section, and then we'll see tomorrow. All right, the question is: do we use previous trend line to determine the next? Previous trend line to determine, no. Now, this will actually lead me to talking about trend in trend. Okay, but let me just touch about this. Now, previous trend line, you can use it to, now there, I don't know if you've seen some charts where we have different trend lines just touching each other. Now let's see this trend line, also. This is the second touch here, and then this should be the third touch here. Okay, this is one. Now this is the previous trend line. Now if the previous trend line is being violated, is being broken, what we should be looking out for is a retest. Okay, now this is your retest, and the market was meant to drop from here, but for some reasons it didn't. Okay, so now this could actually be what, our first touch, our second touch. Okay, this could likely be our second touch here. Then the market got to this point, okay, and was broken. You see, this would have been our third touch. They would have expected price to deliver higher. Alright, but the market got to this level here and was broken. So now this is a break of the trend line. Okay, so now on this break, we are expecting price to get to this trend line. So we've drawn out first trend line, second trend line, and this is the third trend line. Now, once the third trend line gets broken, this is the higher time frame trend line. You see, anytime the market touches this trend line, okay, you see when it touched this one here, it reacted, okay, pushed up. Here also, pushed up, okay, taking out this liquidity, came back to this place. Now the market pushed up. So what we're expecting here now also is the market should push up